Uncensored.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or a stock you want to go over, leave it in the comment section. We'll do it live. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's look at our open positions. S&P's gapped up and is selling off a bit. First one here, it's a T-bill auction that's happening tomorrow. Boeing, I think of all our positions, all of our short strikes are in the money except Microsoft. Microsoft is still completely all out of the money. And then our Roku position is completely underwater, essentially. We have the 95-100 spread, and I think its price right now is like 106 or something. Let's really quick look. It's actually coming down a bit. So again, these are all December expiration, and we got 16, 17 days till expiration. We're in that weird spot where, things get very volatile as you approach expiration. If this thing starts selling off, which I anticipate, these numbers can turn green really fast. But if not, we will have to roll till January expiration. It just gets tricky. So we're in this weird limbo where we should roll eventually, very soon. If not, but we do want to wait and see how things play out. So it's kind of a coin toss at this point. So there's no right answers. There's a couple options. So we'll go over that maybe today, if not in the days to come, by next week for sure. Okay? All right, let's look at new opportunities. First up is GM today. I don't think they had an earnings announcement. I think they had some kind of a share repurchase, and possible dividend talk. $10 billion in share buyback and hike dividend. That's why. Earnings are at the end of January, so we're cleared on earnings. Here's our chart. Again, this is GM. It's not the best company in the world. We are only looking at January expiration at this point. I want to look at the call side here. If you sold the 35 and bought the 38, let's pull out our calculators. 38 minus 10 divided by 2 divided by 300, only 4.6%. Maybe you get paid more on the put side since it gapped up so much. If you sold the 28 and bought the 25, maybe not. 22 minus 5 divided by 2 divided by 300, even worse, less than 3%. So we'll skip General Motors. Good luck to them. Not interested. Dollar Tree. This one is post-earnings. I don't think there was a big enough movement to make it worth our while, though. Earnings were today before the open. Here's the chart. Hardly any movement. So when you go into earnings, option prices are more expensive, and if there's not a big enough movement after earnings, the price just gets squashed and there's no move to make. So we'll move on. Foot Locker, up 16, post-earnings, gapped up, hit the 200-day moving average right on the nose, and that's sold off. So that's very, very interesting move. We may have already missed it, actually. If you were awake earlier today in trading, if you sold the call spread right at $29 on the nose and got filled, you may actually already be out of it. If you sold the 32.5 and bought the 2 liquid, skip the puts. There's some volume on the put side, but you got these spreads of 10 cents. We'll move on. GameStop, that one was in the news. Earnings are next week, so we'll skip this one. I don't think there's any news driving it. Let's look at the prices just for fun, though. Wow, expensive. If you sold the 22.5 and bought the 27.5, what do you get? 105. 22.5 minus 27, minus 67 divided by 2 divided by 500, only 3.8 for such a big move. Put side skip altogether. 2 illiquid over here. You'd have to sell the 9. Okay, moving on. CrowdStrike. I think this is post earnings. Yesterday after the close, here's our chart, a gap up and strong movement afterwards, so good follow through. And it looks not at an all-time high, so could hit resistance somewhere around 240. On the call side, the 250 is a little too close for comfort. The 260 may be too far out. If you sold the 260 and bought the 270, that's 201 minus 106 divided by 2 divided by 1,000, only 4.7%. That's not that great, but this is all earnings that were priced into the option price, so it had to be a bigger move. On the put side, if you sold the 200 and bought the 195, 188 minus 133 divided by 2 divided by 500, 5.5%. If you sold the 200 and bought the 195. Where's 200 on the chart? 200's right about here. That seems very fair. All right. We'll make a mini note. Next will be Workday. WDAY. Post earnings. Gap up. All right. On the call side, it's too illiquid here. The 254, 284, not enough volume. And as you move past 290, zero volume. On the put side, if you sold the 230 and bought the 220, the same thing, liquidity's not that great. Pass on this one. And tap. Up 15%. Earnings were yesterday after the close. Let's take a look at the chart. Interesting. On the call side, 2 illiquid. Same thing with the put side. 20-cent spread here. Had not enough volume. Let's move on. Close. J-Bill. Down 11, almost 12% today. But earnings are on the 14th. Price target adjustment. Yeah, today's the 29th. Maintained at overweight, but lowered at price target. That's why. All right. But earnings are in 2 weeks, so we're going to stay away for now. Too bad. Could have sold puts on this one. Too illiquid, though. All right, moving on. Splunk. Post earnings and zero movement, so this is going to be a lose, lose, lose everywhere. We'll skip this one right away. Baba. Down 2% today. Earnings are in February. Great. Here's our chart. Awful chart here for Baba. Could catch a bounce somewhere around 63, 64. We're not there yet. We're at 75, so it could continue to fall here. If you sold the 65 and bought the 60. 63 minus 25 divided by 2 divided by 500. You don't even get paid for it. 3.8% on the call side. If you sold the 85 and bought the 90. 94 minus 51 divided by 2 divided by 500. 4.3. Skip that one. KKR. Up 5% today. Insurance, right? Financial, yeah. In the news today, they're going to buy the remaining stake of insurer Global Atlantic. All right. Earnings are February 13th. Liquidity, yes or no? Not really. Some open interest, but not a lot of volume. All right, let's check in on some of the stocks you're looking at earlier this week. First up will be Shopify. On the call side here. If we sold the 85 and bought the 90, that's 107 minus 54 divided by 2 divided by 500. Still only 5.3%. That's okay. Skip the put side, I think. You'd have to sell the 64. We need a 63 is what we're looking for. Skip the put side. Next. Roku, we've already have our position open and it's down slightly today. We need it now to move down faster. If we did roll this, whew. 110, 115. It's an option. They could roll this to January with farther out strikes that are out of the money and do 2 contracts. So what we're doing is averaging down. The 110s right here. That's a possibility. What about April? April's pretty far out, but it buys us a lot of time. Yeesh. Or we can go out to April, buy us a lot of time. Again, kind of hang on tight here. Just know if you're going to average down, you're putting more money on the line. So we opened with a $500 spread. If we move it to April or January with 2 contracts, that's now $1,000 potential, okay? Hold for now. Coinbase. Maybe now's the time it turns. Earnings are February. I think this, we talked about this yesterday. It's too illiquid. We're going to take this one off the list just because of liquidity's sake. Oil, what's oil doing today? USO. Down slightly. Again, hanging out in no man's land here. No clear direction at the 200-day moving average. It can continue its move down very easily, or it could bounce here and start going up again. So, again, I have no idea. No one knows. But I need clearer direction to see where we're going. All right? And finally, Affirm. Up again. It's crazy. As long as we move past 40 on the call side, January. If you sold the 42.5 and bought the 47.5. 133 minus 74 divided by 2 divided by 500, almost 6% there. If you sold the 45 and bought the 50, that's 99 minus 57 divided by 2 divided by 500, only 4.2%. On the put side, if you sold the 25 and bought the 20, that's 64 minus 18 divided by 2 divided by 500, not even 5% there, so we'll skip this. That's it for that list. All right, let's go to our IV rank scanner and we'll sort by volume. Not a lot of volatility out there anywhere. GameStop is up there. They've got earnings coming up, that's why. Gold is back on the list. We traded gold, remember, about a month or two ago. Call spread we shorted, moved against us, got into the money, and then came back out, and we made our money. Let's take a look at gold. Yeah, maybe time for a call spread again. Let's see where the strikes are. For January expiration, shit, son. If you sold the 199 and bought the 205, that's a $600 spread. 138 minus 67 divided by 2 divided by 600, almost 6% there. 199 on the chart. $199's all the way up here. That would be all-time highs for the GLD. You've got a top here, you got a top here, and you got a top here. As you see, we've got lower and lower and lower tops, so this could be the next lowest top. That's not the call spread here, a very easy one. However, if it breaks through this one, it'll break through this one, break through this one, and it'll go to all-time high. So, 6%. See, high, low, lower high, lower low, lower high, but then we don't get a lower low. We'll wait on this one. I tell you what, we'll put gold on the list to keep an eye on. And if it breaks through all-time highs, then we'll sell the call spread, GLD. But if you want to go ahead and open your call spread today, go for it. 199, 206. Sorry, 199, 205. $600 spread. On the put side, if you sold the 180 and bought the 175, 46 minus 17 divided by 2 divided by 500. Oh man, not even 3%. So definitely the buyers are bidding up the call side, making it more expensive. But you're definitely taking the risk of it blowing through all those stops. Yep. Okay, moving on. Very interesting gold. I don't know, this one's the dollar stock. Skip. Silver's on that list too. The SLV is a lot harder to trade. It's too small of a stock. SLV. You don't get paid for it. You'd have to sell the 25 and buy the 27. Pass. Next, we got Plug, $4 stock. AI up 5% today. Earnings are on the 6th, so we'll come back next week, follow up, see how they're doing. The KRE. Haven't looked at the KRE in a bit. bank earnings now aren't until mid-January. So that's interesting. It hit the 200-day and then sold off. If you sold the call spread here on November 15th, you probably got out of it before today. I'll wait till it hits around 51, 52 before doing anything on the call side here. Next page. Nope. XBI, no thank you. Dollar Tree still has some volatility, but we'd already looked at that. UNG, too small. Foot Locker, we already looked at. JetBlue is only a $5 stock. Pfizer, we got the fireside chat on the 6th. Nike, they have earnings on the 21st, so we'll follow up then. Sunrun, I don't know this one. Let's take a look. RUN, up 10%. Earnings are February. Expensive here on the put side. If you sold the 9 and bought the 7.5, nah, not waste of time. On the call side, you'd have to sell the 17.5 and buy the 20. 38. One moment here. 38 minus 16 divided by 2 divided by 250, 4.4%. Not as great as you'd think. Pass. USO we already looked at. Salesforce, CRM. Earnings are today after the close, so we'll follow up tomorrow morning with Salesforce. Nope. Moderna. There's an event. The 35th Annual Piper Sandler Healthcare Conference. mRNA. Up 3%. The conference is on, what was it, December 6th? No, November 30th. Tomorrow. All right. Earnings for them are February. Great. Oh, boy. On the put side, if you sold the 65 and bought the 60, it's 114 minus 58 divided by 2 divided by 500. 5.6 on the put side. Not bad there. On the call side, 95 is a little close for comfort. If you sold the 95 and bought the 100, it's 193 minus 123 divided by 2 divided by 500. 7% if you sold the call side. 95 on the chart. 95's up here. That seems very fairly priced. We're going to skip this one just for now. Close. Walgreens. It's only a $20 stock, though. We'll skip it. Cold. Lilly. Nope. All right, one more scanner here on the E-Trade platform, scanning by 90-day volatility. All right, MicroStrategy, Alta, Coinbase. We already looked at Coinbase, Illumina, ILMN. Okay. Earnings are past us. Two illiquid. On the put side, on the call side, same thing. We got a 15-cent spread. Two illiquid. We'll move on. Close. Same thing. All these are very close. Just missing something. Cold US GitLab. GTLB. Earnings. Earnings are on the 4th, so we'll follow up after earnings for them. Uranium ETF. URNM. Do we have liquidity here? Not so much. Let's look at CCJ. Not a lot of volatility in this one, though. Dividend. Earnings are in February. That's good. If we want to sell the call side, we sold the 50 and bought the 55. 72 minus 21 divided by 2 divided by 500. 5% on the nose. That's okay. DocuSign. DOCU. Earnings are in a week or so. We'll skip this one. I think we're done with this list. Look at one more. Lulu, Alta. Already looked at this one. Dell. Let's look at Dell really quick. I don't think Dell's very liquid. They have earnings today after the close, so we'll follow up tomorrow on that one. Just not a lot of opportunities right now. The VIX is super low. We're past the majority of earnings. There's not a lot of movement on the major indexes. If you look at the SPY, every day is just kind of slowly moving up. This is a volatility killer. All right. I think we'll do a short day today. Not a lot of opportunities to go through. Let's just look at CrowdStrike one more time. CRWD. I think we looked at the call side. If we sell the 260, bought the 270, 212 minus 111. Divided by 2. 5% on the nose. We can do better than 5%. I think I'd rather do nothing than kind of just push for something. All right. I think that'll do it for today. So hang on tight for all these positions that are slightly in the money. Aside from Roku, that's very in the money. We'll know by the end of this week, early next week, whether we roll, if we're going to take a loss, or just hold it out till expiration, okay? Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Tell your friends who are also trading options to subscribe and tune in as well. Thanks so much for watching, and we'll see you tomorrow.